So, Savita, how are the markets taking all of this?
Well, I mean, we've had a positive start to the year. I think there still is a lot of liquidity out there looking for a home. I think there's still a lot of cash on sidelines. We still get the question, my client has a lot of cash. Should they buy now or wait for a better entry point, which means there's probably not going to be a better entry point until we stop getting that question. Look, I think that it's tricky right now because where we are is an environment where the uncertainty is high. The other factor that we need to think about is, are our allies going to continue to trade with us if we're playing hardball with them right now? So I think that's the other kind of longer term ramification here. I mean, I think that so far what we've seen is that U.S. corporates are actually in a position where they can handle tariffs, the extra tariffs, reasonably well, especially for China, because they've already had this learning curve since 2018. Half of the economic activity that we used to do with China is now being done with Mexico and Canada. So that's the bad news, is that it's been transported to other areas that are starting to be in the crosshairs. I think that, from an inflationary perspective, this is potentially negative. We've dialed back our Fed call to no cuts this year. We're not talking about hikes yet. So no cuts this year. But I think that where we are is an environment where you want to sort of prepare yourself for upside pressure to rates, to inflation, to the idea that we don't have an all clear on policy decisions until maybe, closer to the second half. And that could stymie corporate planning, et cetera. What I would play, the easiest theme to kind of invest in with Trump 2.0 is deregulation. And I don't think that gets as much play as it should, because that is a theme where it's easier for him to get a lot done. It's not as negative for the economy. It's actually positive for productivity. It's positive for rates. It's positive for growth. So I feel like the lens on tariffs is obviously that's where the headlines are right now, but there are a lot of other ways to think about policy changes and how to invest to make
money. What is that deregulation trade? Is it financials? Because that seems like the easiest, and we've already seen the lift in financials on the back of the expectation of deregulation.
Yeah, but what's interesting, even in financials, if you look at the stocks that are most crowded by professional investors, they're private equity and regionals, or private credit and regionals. The larger banks are still underweight. And I was surprised to see that data in our latest run, because I would have expected to see this huge, bid in the most regulated areas. So it's kind of surprising to see that positioning is still very overweight the sectors and the areas that have less to gain, maybe more on M&A activity or other facets.